Kinross Gold, I've been asked about that company, and you can see why it's jumped from $3 to 24 in the space of what, 20 months. It's a phenomenal rise up. Bit late now, I would have thought. Obviously, gone up with the gold prices. 19th of September, just a week ago, UBS gave it a buy. Canaccord in August gave it a buy. UBS again reiterated. CIBC, a whole bunch of them have been saying buy. But if you're late to the party, is there a problem? Well, there's a couple of problems. First of all, it's not a very liquid company. And I mentioned this before with one or two stocks I've been asked to look at. They tend to be the sort of punter's paradise, the gambler's haven, whereby you've got low liquidity. So any mention on Reddit or X, such like, can give it a pop. So the pumpers love it. And then the social media piles in, and then the dumping and the profit selling goes on, as has happened in the past, of course. You've seen the drops before. So if you think this is purely run on fundamentals of gold prices, I've got news for you. Any other concerns? Well, earnings are forecast to decline by an average of 6.6% per year for the next 3 years. And guess what? The people who work in the company, the directors would know it the best, they're selling. And they've been selling for quite a while. Well, you might say, of course they're selling. They've made huge profits. Why wouldn't they? And that's perfectly fine. And that's a fair enough thing to say. Well, it's also between fair value, actually significantly so. And that's a worry. So is the discount cash flow. It looks overvalued on that. So let's have a look at what we mean by it's somewhat overvalued. You might say, well, look, gold overall. Well, compared to some of its peers, which you might want to look at instead, Alamos Gold, Pan American Silver, and London, not that these are recommendations, but this is really the high risk end. I mean, usually the gold companies tend to be the high risk end. It's the speculators, like in the good old days of the rush to the west. So where have you got? That's not bad in terms of averages, in terms of valuation there compared to peers. But you might want to have a look at some of the others. Why are the others valued more highly? Is it because of the growth expectations, and Kinross simply isn't priced as highly on valuation? Okay. In terms of price to earnings ratio compared to the industry, where does it sit? Well, the industry's here. It's not bad. It's below that. So not as pricey as the others, and probably going to go into that direction. Current PE, well, fair PE should be a little bit lower. I'm not going to squabble about that, nor that the analysts.